Big changes are coming for the self-employed and landlords, and it's going to be very painful. As a business accountant, my team and I spend all day long helping business owners on their journey. And of course, tax returns and the HMRC stuff is a big part of that. And in this video, I wanted to tell you about the changes that are going to be affecting self-employed and landlords from as early as next year. So we're recording this in the middle of 25. So I'm talking about from the 6th of April, 2026. So we're going to look at what those painful changes are, what you need to do, how it's going to work, how to prepare, and some words on if and how you could avoid it. So then what are the changes? Let's get straight into it. So right now, as we said, you've got one tax return per year. There's a free HMRC tool, and whether you decide that you're going to use that tool or not, it is there. You log into your personal tax account, you do your tax return once a year by the 31st of January, that's you done. Now what's changing is that process is moving away from that to the fact that you're going to have to submit quarterly returns. And they're not tax returns, I think I've even used this, they're going to be quarterly submissions. And at the end of the year, you're going to do a fifth and final one that's going to look and feel a lot like a tax return was previously. Now the big thing at the time recording this video is that nobody really understands the full depth of that final submission at the moment, which is crazy considering it's in next year, but that's where we are. So the biggest change to what's going on is that your workflow is going to change. So rather than maybe just keeping your records on a spreadsheet or pulling them all together once a year, or you've got a manual book and you're going to put them all in, you're going to have to move to actually recording it in software and then being able to click a button to transmit this data quarterly. And the only thing you're going to be transmitting is income and expenditure. So it's not like the full tax return. You'd have to worry about your job. You don't have to worry about other things. But if you're in this program, that's what you're going to have to do. And I'm going to talk in a minute about whether you're going to be in the program and how and when. But for now, if you are in, that's what's going to happen. So for example, the tax year runs from the 6th of April, right? But you could choose, for the way this quarter's work, you could actually choose just to do it easy and have it from the 1st of April to the 30th of June could be your first quarter. So what happens is you get there, you then have to keep all your records digitally. So you're going to update it in some software. And then they give you 30 days, like a month, calendar month, plus 7 days to submit. It's very much how they do it, the same with VAT. So you've got a bit of time to submit that. And what's likely then is you're going to bookkeep in the software and then you're just going to click a button and it's going to transmit it. So the actual submission is unlikely to be that difficult. It's going to be this big change to you going into software. Now we're going to talk about software in a minute, but just note there is no free tool to do this from HMRC's point of view. They're not providing you like a portal login or anything else. So the main change is going to be this workflow. Now the kicker to this is that if you have rental income as well, we're going to talk about how that affects it in a minute. You've actually got to do a submission for your business and a submission for your property. So you could do up to 9 submissions in a year just for those two things. So you're going to have to worry about doing records for both. And then in that final year-end submission, whether it's for rentals or whether it's for your business, you're then going to have to take into account some other income, any other adjustments you have, and that will give you kind of that like final tax bill so you know where you're at. And of course, with anything with the revenue, they have said there are penalties that are going to be coming out if you don't do these things. But they've also said, and I think this is quite cool from them, is they've been actually quite proactive in the accounting community coming out, and they've actually said, and their director of the Making Tax Digital program has been quite open about this, saying, look, we want people to get this right. We want to help accountants do it. And if you do one of these quarterly returns wrong, they've actually given you the ability to kind of just correct it on the next return. So they're just interested in getting that data right now. At least that's the current party line. And I think that that's what we're seeing. So we've spoke about there how it works in general. So how is it going to roll out and when are you going to be affected? So the first batch of people that are going to be affected is if your self-employed business has turnover, sales, revenue, whatever you want to use the word, of more than £50,000, then you're going to be in the first batch of people. Now, if you happen to own a rental property as well, or maybe you're not a small business owner, but you're a landlord, if your rental income is over £50,000 at the top end, all of your rents coming in is over 50,000, you're also going to be in that first batch in. Now, if you've got both going on, you're going to combine the turnover figures together. And if that income combined is over 50,000, you're also going to be in. The big thing here to note is it doesn't matter about anything else. It doesn't matter about, do you have dividend income from somewhere else? Do you have, your job is over 50K? Nothing like that matters. It's all about your business affairs and your property affairs. And the way they get that number is based on your last tax return. So if you imagine at the time we're recording this video in the middle of 2025, they're going to look at the 24-25 tax return. So the one that you've got to submit before the 31st of Jan 26. It's kind of the one people would look at as this current tax return. I know the year's gone, but that's how often people look at it. So if you go to submit your tax return now and you know that your turnover figure that you've put in that box is over 50,000, you're going to be in the first rollout. And what's happening moving forward is those figures will start to come down. So in the following tax year, when your next tax return goes in, if you're over 30,000, you're going to be enrolled from the 6th of April 27. And then if you're the following year, if you submit your tax return and when you're over 20,000, you're then going to be on the 6th of April 28. Now, currently, they haven't announced any more plans to bring that turnover limit down. But when it first got talked about, the limit was a lot lower. So you've got to think that it's likely that people will end up having to do this at very small turnover levels. Now, you might be thinking, well, I've only just started my business and I haven't done a tax return. I'm not doing it for a while. So when and how is that going to affect me? And the short answer to that will be, for loads of technical reasons, you probably won't have to worry about it until the 6th of April 2028. I'll just skip over it completely and just say 6th of April 28 is very likely when it's going to first affect you. But I do think that you should be preparing now, as we're going to talk about. Now, after hearing that, you're probably thinking, this sounds horrendous. Why are HMRC doing this? And if we go back to a policy paper, so this has actually been coming for nearly 10 years, and your subsequent follow-up might be, well, why is no one talking about it? Why are we only talking about it now? And I'll touch on that. But 10 years ago, they came out with a policy paper that said, look, it's costing the country £8 billion in taxpayer error. And they think that this system of forcing people basically to report quarterly and keep their records digitally is going to save about 10% of that. So if that's true, great for all of us, but there is going to be a big cost to small business owners, because you must be thinking already, great, if I haven't got software, I've got to go get it. Is my accountant going to be charging more money? How does all that work? And we'll touch on that. But yes, there is going to be some pain for you. Now, in their original impact study, they actually thought there would be a one-off transitional cost of just £280, and then you would see a reduction in costs moving forward. I'm not sure we're going to see a reduction in costs in all honesty, but that's what they said. And I think many people have tried to take the revenue to task on this sort of line of thinking, but that's where we are. So it is a tax-saving idea. And you might be thinking, well, surely then they actually aren't going to be too far from, if they're getting the data quarterly, wanting quarterly tax instalments. But I've heard it firsthand that that's not currently in the plans at all. And I can see that for technical reasons, it's actually be quite difficult to do. So at the moment, quarterly tax payments are not a thing. It is just purely quarterly reporting. So you might be thinking, well, why then are accountants and people not telling me about this? Why am I only hearing about it now when it's so close to the deadline? And the reason being, and it will become inevitable from me talking, is that actually there's quite a lot of stuff that's still unknown. We know what the general process is, I've just told you. But for example, the end of year sort of final submission, there's a load of questions about how that's actually going to work. And the software providers don't even know themselves. I mean, I've done a lot of roadshows and things like that and talked to software providers, and they can't tell me on a technical level how they're going to do certain things. So for sure on this channel, we're going to be doing more deep dives into software in further videos so you can see what's going on and how it was actually practically going to work. But for now, know that that's been the biggest challenge. And for accountants, just when we're talking about myths, I think there's this feeling that accountants are going to be benefiting from this. But actually, I've not met an accountant yet that's really keen to do this. I think actually causes quite a lot of problems with staffing due to the way that the deadlines work and everything else. So I won't bore you with that, but just know that it's in the accountancy world, there's even a WhatsApp therapy group for this, because people are that concerned about what it means for their clients and what it means for actually providing an accountancy service. But you absolutely will be able to get help from accountants moving forward on this. So what do you need to do now? Well, there's a few things. Firstly, I spoke to you about rollout dates and when you might be affected. So to be sure, the Revenue have made a tool, which I'll link in the description, where you can go and answer a few questions and it tells you. So that's the first one. Just see when your rollout date is. But then you've got to really just go and sort out software. And of course, software companies are all out there promoting their goods right now, and there's a lot of different options. The Revenue have actually compiled a site where you can flick through and have a look at those. But the problem is not all softwares are made equally. So for example, there is a tool, like we would refer to it as bridging software in the game, that allows you to basically pick cells on a spreadsheet and say, that's the data I want to send for these quarterly updates. So you can do that. But so that software might only do that and not the year-end submission and with all the adjustments. Or it might only send and not sort of like suck data back down, where the more advanced softwares will bring things back like a tax calculation, a guess at your tax bill, so you know where you are. Now, I think there's big problems with that because it doesn't take into account other income, but at least you'll have some idea of what potentially might be building. So all the softwares have got different things. So right now, I think you should absolutely be looking at what works for you. Now, for me, there's always a market leader here, and that's Xero. So I think if you're thinking, look, I want something that's going to grow with me, I'm not just looking for a solution just for now, I would say that Xero is probably the one to go for. And we're going to be doing more deep dives into various bits of software. But for now, at this point, if you're just looking to get ahead of the game, this is the only one I could truly say to you, look, that's the one that we're going to go for. And what I like about it, and many of the softwares are doing this, is there's different plans. So they've launched a new one called Simple. So if making tax digital is your primary concern, you can sign up there and get yourself going for really, really cheap. And then you can upgrade the plan as it goes to get into the more meaty stuff as your business scales. But do go and have a look, because there are some other good ones as well. Like QuickBooks is probably a close second. They've got a nice mobile experience, but then at the same point, I always think you want to be at your laptop probably doing your bookkeeping rather than your mobile, but do have a look and see what's out there for your needs. Oh, and if you did actually want to get ahead of the game even more, you can actually sign up to a pilot with the Revenue and physically go on and submit them, but it is very restrictive about who can do it at the moment. But do know that is an option as we're talking in the middle of 25. So then finally let's talk about how you can avoid it. And the short answer is there aren't many ways. So outside of changing religions, for example, because there is a religious exemption in some cases. You could potentially go limited, or you could form a partnership. Now, I think partnership will probably likely come into MTD sooner than a limited company would. There's no current roadmap for a limited company to come into it, but that would in theory delay it. But there's tax consequences to doing both, and there's cost implications to doing both. You could obviously get your turnover down below 20k on your next tax year. Might be possible. I think if you're right on the cusp, you might be able to delay a payment or do something, but I'd never encourage people to just actually hit their income just for the sake of not complying with digital tax requirements, but that is technically there. But on a serious note, if you have got a disability or you're digitally excluded for some reason, like you're in an area with no internet and things like that, there are actually some proper exclusions and exemptions that you can apply for, so go check those out on the revenue site. Now then, your action step right now is to go and get that software sorted. So here's a video to help you with that next stage of that journey.